Thank you for staying on with Niaga AWANI. We'll start with international news. The ringgit performance steadied near its strongest level in nearly 10 months against the greenback of anticipation of softer interest rate hikes and the US going forward. After the latest US inflation data showed a declining trend, the market interpreted this as a signal that inflation is under control in the US, which might push the US Federal Reserve to slow down the pace of interest rate hikes in the second half of 2023. An analyst said Malaysia's positive economic figures, which had spurred buying interest for the ringgit, were also supported by China's ongoing economic reopening. So to discuss further, joining me virtually this morning is Dr. Sailesh Kumar, Group Chief Economist and Head of Market Research, RHB Bank Berhad. Good morning, Doctor.
Yeah, hi, good morning.
All right, thank you for joining us this morning. All right, ringgit has strengthened to 4.26 against the US dollar. So will this momentum carry, and will we see a 4 ringgit against $1 situation in the future?
Yeah, so our dollar ringgit forecast for the year end is 420 to 430, and that has already clearly materialized. We're trading around 427, and what we can see is that the ringgit strengthening against the dollar so far has been driven by a pretty strong balance of payments position in Malaysia, as well as a decline in dollar hoarding by corporates, and essentially quite a capital inflows into the bond market by foreigners. So we think that right now, given the extent of the move of or the opinion of ringgit against the dollar, is that this may be a little bit stretched for the time being. So we are maintaining our forecast for the year end at 420 to 430.
Doctor, help us understand better about the ringgit situation. Is this more of ringgit strengthening or more of the USD weakening? What about the other key currencies?
So right now, the way that we think about it is that it's partially dollar weakening, and also partially the idea that the domestic factors which were against the ringgit or going against the ringgit last year, such as the dollar hoarding by corporates, as well as weakness of capital inflows into the equity and bond market, those are starting to reverse. So it's very difficult to pinpoint exactly, but it is due to both dollar weakening and also improving domestic fundamentals.
Looking forward, what is the outlook on ringgit against safe haven currencies and regional currencies, which is critical to ensuring stable prices and the investors' sentiment in economic prospect?
Right. So, in 2023 Global Economics and Market Outlook publication, which we put out on December 15, we had mentioned that, the dollar peak was behind. Joined RHB Bank since December 2020, so we've taken a turn. Since December 2000, we've taken a turn. The three main reasons why the dollar will weaken from second quarter to the fourth quarter of this year on a sustained basis is, one, is that the markets would have already priced in the extent that the Fed is going to, the Fed funds rate. Two, that we're looking for essentially the U.S. and global stock markets to be on a bullish trend this year. And third, that flight to safety catalyst that drove the dollar higher for much of 2022, that's over. So what that means for regional currencies is that most regional currencies, including ringgit, will strengthen against the dollar from the second to fourth quarter on a sustained basis, and our dollar ringgit forecast remains unchanged for the fourth quarter of the year, trading range of around 420 to 430.
All right. How about the economic situation right now? How would you view the economic situation of Malaysia in the first quarter?
Yeah. So, the economy is the momentum coming into the year is pretty strong. What we're seeing from our own in-house proprietary database, which we use machine learning to put forth for these forecasts, is suggesting that consumer remains strong, the market remains strong. Inflation is coming off with a little bit of uncertainty in terms of whether the government is going to do a fuel price adjustment, at least targeted fuel price adjustment. We think that's going to take place. But overall, we're looking at GDP growth in Malaysia for 2023 at 4.5% versus the consensus forecast at 4%. So we're reasonably positive for Malaysian economy. The only thing is that in the first half of the year, we should see some slowing, but that slowdown is not much to be worried about. It's a slowdown to trend growth, followed by a recovery in the second half of the year.
All right, Doctor, maybe you can share next what will be the possibly that can be unfold in Malaysian Budget 2023, which we unveiled on the 24th of February by the Prime Minister himself. So what should we expect from the budget talk?
Yeah, that's a great question. We're headed into budget. It's always good to get an idea of what they're going to do. And so the three key messages are that first, we think that a fuel price adjustment, albeit targeted, adjustment will happen in 2023. It's going to be modest in nature. Second, essentially, we're not expecting any significant tax policy reforms, such as announcement of reintroduction of GST or the changes, significant changes in personal and corporate income tax rates. And we think that the development expenditures will be concentrating more in the regions of Sabah and Sarawak. The fiscal deficit, we think that the announcement is going to be around 5.5% handle in terms of deficit versus last year's deficit at around 5.8%.